The broadcast is now starting. All attendees are in listen-only mode.
Welcome to the AdviserLogic RiskLogic 2.0 tutorial. In this tutorial, I'll aim to take you through entering in a client's existing policies, all the way through doing an insurance needs analysis, product quoting and comparison, through to recommendations and justifications, ready to generate your statement of advice. You will notice in the comments below that we have some hyperlinks that will enable you to skip ahead to another part of this tutorial, depending on just what it is that you're hoping to see. So the first screen that I'm on is adding in the client's existing insurance policies. So this is accessed by hovering over the word insurance across the top of your client's file and clicking on the existing policies tab. In here is where you're going to add in your client's current insurance policies. So this can be done by clicking on the plus sign next to the client's name. When there is a partner involved, you will see the client's initials and the partner's initials will appear next to them at the top, and you will see a similar process sitting underneath whereby you can enter in the partner's existing insurance policies. So when you're going to add in the existing insurance policy, you click on the plus sign and then you're going to fill in all of the details. So I'm going to keep this one nice and easy for today and just say life and TPD existing. Across to the right of that, we're going to select which insurance company the client has their current insurances through and the status of the policy. So typically, if you're entering it in, it's most likely going to be in force. However, there are other options around the current status depending on just what you're entering in. From there, it's about entering in whatever information you have available. So the policy number, who is the owner? Really important on this one if it's owned by the client or via one of their superannuation funds to make sure that you check the appropriate ownership entity. The product type is going to be about the types of insurances that are held within this existing policy. If it's a standalone life policy, you'd choose on life, standalone income protection, trauma, and so on. You would choose that one item. If this current policy has multiple types of insurances within it, perhaps a life and TPD combined under the one policy number, that's when you would be choosing on the combined button. Choosing the combined allows you to put in the various types of insurances and their sums insured, but we'll get to that in a second. The premium frequency is about how often the client is paying their premium, what their premium amount is, whether there's a policy fee, and then the premium basis, as in whether or not this is stepped or level cover, or under one of the other options when it's held via superannuation or perhaps an industry super fund. The start date of the policy, so going back to when this product first was put in place by the client. If you have information regarding the previous review date or the last review date and when the next insurance review date is due. These can be reported on, so through our database segmentation tool, you're able to generate a report to tell you which clients have got an insurance review date coming up, perhaps next month or even during the current month, depending on what it is that you're looking at. The purpose of the policy, you can pop in details around personal, key man, whatever type of cover it might be that the client has. Smoking status, if the client is smoking, perhaps this existing policy has been assessed based on them being a smoker, might be something that you're able to review with the client down the track if they've quit. Otherwise, if they're non-smoker, we'd leave that as no. The managed externally option is about whether or not you're looking after this particular insurance policy. So the client may have come to you and they've said, yep, we do have this existing insurance policy, but you're not the current advisor on it. Now, you may go about changing that, or it may be left that the client has the policy, however, that it is being managed or looked after by somebody else. That's a simple check it across to being no or yes, depending on what the situation is. Once we start getting into the cover details, it's about entering in the sums insured that the client has. So straight life cover, we'll pop in the life amount. When the client has TPD cover, again, it's about putting in the amount, but then you get some more options around the TPD. So have they got any or own occupation? What kind of cover do they have in place? Do they have any buyback in place on that particular TPD product? And then what is the premium type or premium basis for the TPD cover, just in case it is different. You do have the option to enter in if the client has double TPD, or you continue moving through entering in the other sums insured. And again, as you're popping in a sum insured, you're seeing more options around the buyback, premium basis. If I put in an income protection amount, I need to enter in waiting periods, benefit periods, and the like. So it's all about entering in the types of cover that your client currently has in place. Once you've done all of that, you'll click on the Save Changes, and that will have added in the client's existing insurance policies. Now, as I mentioned, if there's a partner as well, you'd go through the same process for the partner. Potentially, you might even have second or third insurance policies in place for the client, depending on just what cover they have. Now, this might be that they've got a life and TPD policy through their super fund, and then you might add in a second one because they've got a flexi-linked trauma policy or income protection. So it's all about going through and adding in the client's existing insurances. I will point out here, if you accidentally put one in and you go, oops, that was a bit of a mistake, clicking back into it, you will get the option for deleting down the bottom of the page. So it's all about giving you those options to go and say that one's not meant to be in there. You will also see options up against the premium amount whereby you can archive an insurance policy. So that might be fast forwarding a few months down the track, the client has put in place the new insurances that you've recommended, and this policy is now been cancelled or archived. You can pop it into the archive area, which means it stays in the history in the back end, but it's no longer going to appear as an existing insurance policy. Likewise, we do give you the ability to duplicate, so perhaps the client does have a second policy that's almost the same and you don't want to re-enter absolutely everything in, so you can create a duplicate and then just tinker with the second policy so that you're not redoing all of the data entry. Once you've done that, you can proceed to the insurance needs analysis. Now, with our insurance needs analysis, the information that comes through here is based on all of the data entry that you have completed throughout your fact-finding process. So entering in the client's income and expenses, their current superannuation, their current assets, all of that information is going to come through into the insurance needs analysis. On this page, we have a needs analysis for the life, TPD and trauma amounts. And what you can do here is you can expand each one out in order to do that needs analysis. So with my particular client, I've entered in that he's spending $50,000 a year for the next 31 years with a growth rate of 3%. He's also got some insurance expenses, so they're coming through from the fact finder as well. With our calculation, what we're doing is a present value, payment value type calculation, whereby we're saying to provide $50,000 a year for the next 31 years, assuming that it grows with inflation, this client would need a lump sum of just over $1.3 million. Up in the top right-hand corner, you have got the option whereby you can set some defaults. The types of defaults that you're able to set is an assumed rate of return. So on that lump sum that we've just calculated, my system's actually calculating that it's going to be invested and earning a rate of return of 4%. And that's how we're going to get to that $50,000 a year recurring. Underneath, we can also set some defaults around funeral expenses, TPD and trauma medical expenses. And clicking on Save will mean that that information is going to flow through automatically. As you're talking to your clients, they might say, sure, my current living expenses are $50,000. However, if I was to pass away, we wouldn't need that much. You can click in and you can change the amount according to the conversation that you're having with the client. Really important on this one is that this would only be changing the calculation for life cover. If it's the same principle for TPD, you can click on the button that says copy across to the TPD, in which case we've just updated those amounts under the TPD calculation. And likewise, you can copy across to trauma, which means the trauma calculation has also been updated. So once you've updated the ongoing expenses, you can click on the Save button down the bottom, and then you'll potentially be going through and doing the same idea or same concept for the one-off expenses. So again, through that options up in the top right-hand corner, I had preset the funeral and medical expenses, so they've come through automatically. If there are other one-off expenses, I can enter those into the relevant tabs. Otherwise, in this case, I haven't changed anything, so I don't need to click Save. I can just close that down. The next one is about bringing through the client's current loans. So this client, I've entered in that he's got a current HEX loan of $50,000. So that's coming through for each of the types of cover as well. Now again, I could click in and say, look, if he suffered a trauma event, we'd be not worrying about repaying that particular loan. And it's only changing that one trauma quote. I could copy to TPD in Life, or I can click Save on the bottom of the page. Now, what that does is that gives us a total at the top of the page about the capital that is required for life TPD and trauma. The lower half of the page is talking about what the client already has in place that could go towards meeting that need. So this particular client has got some existing insurance covers, some existing investments that could potentially be sold down, and a superannuation balance that could be used towards meeting those insurance needs. In the event that you're saying, I'm going to be recommending that we replace this insurance, you can click on the delete button over on the left-hand side, and we'll always give you the pop-up saying, are you sure? Because once you can remove that one, we're not going to pop it back in. Otherwise, we've done that one to say, no, he's got no existing insurances, which then recalculates how much additional insurance cover the client needs. With the others, you can expand those out and make any changes appropriately as well. So he might say, look, in the event of any of these events happening, I'm not prepared to use my bank account. Again, copy to TPD, copy to trauma, and that's going to update the calculation. So that in the end, we get the red line down the bottom that says how much additional cover is required. Over on the right-hand side, for those of you that prefer to look at this visually, we're giving you a pie chart to basically say the green is what you already have in place or what you could realistically redeem in order to meet the need, and the red is going to give you the shortfall. You can choose to download a report which will put all of this information into a Word document which you can then put into the client file or upload into the document vault ready for your review and audit to be completed. At the top of the page, we do have a button that says Other Covers. This is where you can go to do a needs analysis for either income protection or children's trauma cover as well. So in the income protection, we're going to be bringing through 75% of the client's current income. You could be having that conversation around what amount of cover does the client actually require. So just like on those previous pages, it's a case of over-typing the amount that's come through if that's appropriate. When you're doing an income protection needs analysis, you will also be talking to the client about their nominated waiting period or how long they could afford to live before a claim is started to be paid out. Same with benefit period. What kind of time frame would they like to receive their income protection claim in the event that it ever needed to be paid out? And once again, down the bottom, we have their existing insurance cover. If you're recommending to delete that, you'll probably put that to 0 so that we then calculate what additional income protection cover is required. Once you've completed your needs analysis, it's a case of moving through to your RiskLogic. Now, RiskLogic is our quoting and comparison tool. So it's all about putting in the relevant information about where the client is right now and the types of insurances that you're looking to recommend for the client going forward. So up in the top section, we're looking at the new policy and how we want it to look. To edit any of these fields, you're going to click on the green half circle with the pen in it. Now, just to explain a couple of the terminologies in here, we do have the tax environment that you need to choose. So again, this is looking at the new policy, the new product that you're about to recommend. The idea is that if you're quoting for all of the insurance covers to be held outside of the super environment, you're going to do a quote for ordinary. If your recommendation is for all of the insurances to be held within superannuation, you'll choose on the superannuation option. If you're not sure and you're sort of thinking, should I do it all in or should I do it all out of superannuation, choosing the selection of both means that you're going to get results for both everything inside of super and everything outside of super, but separated out. If you're looking at doing a combination, so some of the insurance cover inside of superannuation with a flexi-linked or linked policy outside of superannuation, you're going to be looking at the hybrid option. Now, when you choose hybrid, further down in the screen, we see some other options around flexi-linking. Now, I'm going to keep it really nice and simple for the purposes of the tutorial and go with both. Depending on what tax environment you've chosen, the channel will also change and be varied. So I've left it as both. So I'm then saying, how do I want to go about getting this insurances? Am I looking at just via super platforms, just via an investment platform, or how am I recommending the client goes about getting this new insurance policy? Premium frequency, this is about your recommendation for how often the client should be paying their premium. We have the premium structure, whether you're recommending stepped or level. From there, you can also put in that you are dialing down the commission, because this might end up getting a slightly cheaper premium for the quote for the client when you get your quotes coming back. Multiple lives, if you're quoting for more than one life, you can say yes and choose the number of lives that you're quoting for. Again, that may end up resulting in a premium discount for the client. If you have undertaken an underwriting pre-assessment, you may be aware of a premium loading, in which case you can choose this here and enter in the loading that you've been provided by the underwriter. It's not expected that you would know that at this stage of the process, but if you do, we have somewhere that you can pop that into. A little bit further down on the page, we do have the option to say whether or not you're wanting a few underlying features. So GFI stands for Guaranteed Future Insurability. If that is a feature or a benefit that you're wanting to recommend for your client, make sure that that's on a yes, and that way when we get the premium quotes coming back, only the products that offer Guaranteed Future Insurability will be returned. BIO stands for Business Insurance Options. Likewise, if that's an underlying option that you're wanting to quote for, you need to slide that across to yes. Waiver of premiums, another underlying feature that may be what you're looking for your client, and the same with accident-only products. From there, it's about clicking on the Save button to save any updates that you've made here. The next tab down is about your life insured or the client that you're working on. Again, most of this information is going to filter through from your fact finder data entry. However, the pen allows you to edit that information that's in here. When you're looking at existing policies, it's about going through and saying who does the client currently have their insurance with. When you're putting in the supplier, it might be that it's an industry superannuation fund. I will just mention that with industry funds, a lot of the times they do have different product ranges. So in the case of CBUS, they have their standard industry cover. They do have an option whereby the client or the member can have a personal level of cover. So that's not the standard. They've gone through the process to have a different level of insurance cover. And CBUS also offer cover for sole traders. If I looked at, as an example, a Q Super fund, they have two different types of insurance cover as well. One for government employees and one for non-government employees. So it's about knowing the client that you are working with and the types of their existing insurances. Once you know that, you click on the relevant option and we put that to the top of the page. If your client has an existing retail insurance product, it's once again about putting in the supplier. If you know the product name, you can also put that into the next box along. So with the product name, this is about death cover, critical illness, whatever type of product it is that your client currently has. There is one last search option, and that is the product range. Now, a lot of the retail insurance providers do have a lot of different product ranges. So we can see here with TEL that there's the accelerated protection. My scroll bar over on the right-hand side is rather small, but if I start scrolling down, we're going to start seeing some that have got super options. If I keep going down, we get other product ranges. So there's self-managed super funds, there's just standard super. So it's all about having an idea of what type of product the client currently has. Over and above that, with retail insurances, the last two columns are referring to the PDS dates or the product disclosure statement dates. So you do need to know when your client's existing insurance policy started so that you can grab the right one based on those dates. If you do pick up the wrong one, when we get to doing a product comparison in a moment, you're not going to be comparing the right product, because when a new PDS comes out, that usually means a definition has changed or a new event is now covered. Something has changed. So it's really important to make sure that you are clicking on the right one, including the right start date and the right year. And again, you would just click on the relevant one, click on the Save button down the bottom, and we've now put in an existing policy to be compared against. When I click on the Save button, it's now time to move down to the next areas. With using the AdviserLogic needs analysis, the sums insured are going to automatically populate for you. You're not locked into that. You can still edit those amounts and change them depending on what it is that you are recommending to the client. Obviously, if you are changing these from the needs analysis, when you get to doing your statement of advice, you will need to make sure that you are discussing or disclosing why the amounts are different, but that's something for in the SOA. As far as RiskLogic is concerned, you can go through and change those amounts. When you are looking at putting in TPD, trauma and income protection, it is about choosing those underlying options, whether it's any or own occupation, whether you're looking at quoting for buyback or not. This is also where you can change that amount. By clicking in and editing it, you are able to change the amounts before you click on the Save button. We will also give you notes along the way. So this note is ownership and split are only editable when the tax environment has been set as hybrid. So that's referring to back at the very top when I chose the both as my tax environment. I'm not able to change the ownership or the split because I don't have it set as hybrid. So we're giving you little tips along the way so that hopefully a lot of these data entry points will be a lot clearer and a lot easier. Same concept with trauma. I'm just going to change the amount because I know I won't get very good results when I'm looking at a trauma amount that high, especially being above the life cover amount. Underneath, we also have the option to put in for children's trauma, so the amount of cover you're looking for, the number and their age's next birthday. And again, we've given you a couple of notes underneath, which is basically talking about the tax environment and the age next birthday that's required to go into this space. All right, so once you've done all of those data entry points, it's about updating the quotes, and then we look to see what sort of results we're going to get. Now, it is important to remember that all of our quotes and comparison tools are done by Rice Warner. That's our external research house that we use to get all of this information. So this time around, I've got a number of results coming through. Before I even start looking at those, I'm going to click on the Save Quotes button down in the bottom left-hand corner. And in this one, I'm just going to call this one my tutorial for YouTube so that I know what it is when I come back to it later on. But that also gives me the ability to use the View Saved Quotes option at the top of the page, whereby I can go back and look at quotes that I've previously done. Over on the right-hand side, I've got a column for my insurers, the column for the product, the regular premium. In my case, I've quoted per month. The next column is a premium projection. So this is provided based on a set of criteria that's been implemented in the background by my practice champion. So through the tools area, practice champions can choose what time frame that they want that premium projection to be over. The next column, the feature score, this is by Rice Warner. So the feature score is a rating based around everything in the product: underwriting processes, claims history, features and events covered, pretty much everything about the policy, excluding the cost or excluding the premium. The value score is all of that as well as the premium. So that's going to give you the difference between the feature score and the value score. So once you're in this page, you might be looking at a number of different providers and you want to actually compare a couple of them to make a decision. When you hover over the logos of each of the different providers, you'll notice a tick becomes visible. When you click on the tick and you've chosen 2 or more products, you will see an option down in the bottom right-hand corner to compare the policies. Now, once again, all of this background research is powered by Rice Warner, and what we end up seeing when we get this page is the 2 products that I've just chosen up against the existing Q Super that I saved back in as an existing policy. What we're going to see in a moment is a list of all of the events and the features and the benefits of those products, and we're going to get ticks and crosses about whether or not those options are available. So you'll see here that I've got a number of ticks with a couple of crosses depending on just what it is that I'm looking at. So it's about being able to go through and look at what is on offer from each of the different product providers that I'm looking for. Now, down the bottom, I can download that comparison report, which is going to put all of this into a Word document so that I can upload that or save that into my client file. When I go back, it's going to take me back to my RiskLogic page, at which point, hopefully, I'm ready to make a recommendation. Now, in order to make the recommendation, it's about choosing one tick box or one option. From there, down in the bottom right-hand corner, I can click on the Proceed to Recommend button. Now, this is going to come through to allow me to put in any information. I do apologise, that means I didn't click on the tick button. So I'm going to say no, and I'm going to re-click on the tick before I click on the Proceed to Recommend. And then this is going to create my recommendation. So the first page I'm looking at here is an overview of what I've put in. It's a way of me going through and double checking to say, what have I actually quoted for? And is that what I'm actually wanting to recommend? Now, on this same page, I can add in a reason. So when I click on Add Reason, it's about going through and justifying why I'm recommending this product to the client. So at the top of the page, I've got my reasons. Again, the practice champions can add or change these ones depending on what they're wanting to put in here. From a planning point of view, it's about going through and checking the options that you want to come through into your SOA as your reasons, as your benefits, the consequences of the replacement, and also any disadvantages. Now, again, you might have noticed in mine under benefits and disadvantages, I haven't added any in at the moment, but my practice champion can go and build those according to what you like to see coming into your SOA. So this page is effectively an overview, a summary, a place of double checking what it is you're recommending for the client. Once you're in this spot, you're going to click on Save and Proceed. So this is then taking you to the actual recommendation page. And it's in here that you can open up and say, oops, I need to change something. There's something not quite right. And that way you can go through also and put in your commission rates so that your disclosure of fees and commission will also be being populated. It's a matter of saving this to make sure that everything does come through. Now, I deliberately chose an AIA product. At the moment, we are able to have data feeds backwards and forwards with AIA. What that means is if you are recommending AIA, there is a different option down the bottom that says Get the Latest Quotes. Now, what that's going to do is effectively link you, rather than to Rice Warner for quoting, directly to AIA for the AIA quote. So once you've done this, it's advisable to click on the Get the Latest Quotes, in which case you might see what I've got in here. I've got a little bit of a weird message because of what I've entered in for this client, but the idea is that you will be able to get updated AIA actual quotes. Now, the bonus of this one is going one step further. Once you've got the right quotes for AIA, the button actually changes to saying Buy Now. Now, when you click on Buy Now, what we do is we flick you into AIA's online application. And what you're going to find is a lot of this is going to be pre-filled for you. Now, we are working with a number of other insurance companies in the hope that we will be able to get this feature up and running for other companies as well. But at the time of recording, it's only AIA that have come on board. But this is taking me to the AIA page, whereby I can say calculate and save this quote, moving through to the actual application, at which point you're in the AIA software program. So from there, you have now created your recommendation, and then you can, if you forget, add in more justification reasons. So this is a safety net or a safety page to say, okay, last chance, let's double check everything that's there, make sure we've got our reasons and benefits and everything saved through. Once you have saved your benefits and disadvantages, your insurance side of things is completed and you're ready to go and do your statement of advice. So it's about following the bouncing ball from one section through to the next. I hope that's helped you navigate through our new RiskLogic 2.0. As always, if you do have any questions, feel free to communicate with our support team.